Hello everyone. Today I am going to continue the forensic audit chapter. Today in this video we are going to cover module number 17.2 and 17.3, that is fraud risk management and forensic financials and its audit technique. After that the balance will be ethics and opportunity, that is module number 17.4 and 5, that I will cover in the upcoming videos. And one more thing, I am going to start CFR also. In that the first topic will be government accounting. Okay, soon I am going to start that also. So please do subscribe my channel, then you will get the updates regarding those videos. Okay, let's get into the topic, that is fraud risk management. This is model number 17.2 under forensic audit chapter. In that fraud risk management, the first thing which is coming is fraud triangle. What is fraud triangle? In that fraud triangle, what are all the elements? These are the elements under fraud triangle. That is opportunity, pressure and rationalization. Okay, because of these three elements, a person who is honest, but because of these kind of elements, he will start doing fraud or financial crime. What are all the elements? That is opportunity. Wherever the opportunity is created, they will start doing fraud. Where because of pressure, whether it is a financial pressure or personal pressure, whatever it is, due to pressure they will do it. What is a rationalization? That I will tell you while explaining. Okay, rationalization is justification. They will justify the fraud things. Okay, first one is opportunity. Opportunity, where we will get this opportunity. In an organization, there is weakness in internal control. If there is a weakness in the internal control, the opportunity will be created for fraudulent activities. Inadequate supervision and no review. There is no proper supervision. There is no proper review in that organization. There will be opportunity for fraudulent activity. Lack of separation of duties. If a person is committing a fraudulent things, or the organization is committing a fraudulent thing, in that the person who are all involved in the fraudulent activity, they won't ready to segregate the duties to others, because they will get the fear of if I given the duties to some other, whether they will going to find the fraud or not. So if they find it, means what will happen? Because of that they are not ready to separate, give the duties to other. So lack of separation of duties. If there is no proper separation of duties, means there will be the opportunity to fraudulent activities. If the duties are properly segregated and given to many persons, means the fraudulent activity will be less. If it is in a single person hand, means there is a lot of opportunity for fraudulent activity. Absence of management approval. If there is no approval, there is no requirement of approval for a transaction. If there is a financial transaction is there, for that no approval is required, means they will do anything. Okay, employee he is having the motive of doing fraudulent activity, means there is no approval. Management approval is there, so he will commit fraud. So absence of management approval. Weak system control. So internal system is weak, or there is no proper system control, then there is an opportunity for fraudulent activity. Okay, pressure. The second element of fraud triangle is pressure. The pressure or motive can be imposed or arise. If a person is having a pressure or motive, means what are all the things imposed to get those pressure? The personal financial problems. If he is having some personal financial problems, because if a person is there, his daughter is going to get married, for that he is requiring so much of money, but he don't have that money. So because of the financial pressure, he will commit fraudulent activity. And for expenses, sudden expenses, due to these kind of things will motivate a person to commit a fraud. Personal vices and addiction. If a person is there, he is more addicted to drugs, alcohol or gambling activities, means he require more money. So for that he will do fraudulent activity. Unrealistic deadlines and performance goals. If there is a lot of deadline, that is unrealistic deadline, if a person is cannot able to meet that deadline, but for that he has to do that. And performance goal, he cannot able to attain that performance goal, but then also he is having that goal to meet. Then in those kind of situation, there is some pressure. Because of that pressure, they will commit the fraud. For example, Wells Fargo. In the previous video, I explained in the corporate fraud, under corporate fraud topic. In that Wells Fargo, because of that deadline and target, they opened fake accounts for their clients. That is an example for that unrealistic deadlines and performance goal. Rationalization. What is rationalization? Justification for their fraudulent activity. This is the third element under this triangle, fraudulent triangle. Okay, rationalization means justification for their fraudulent activity. They will do the fraud and they will justify it. Though you are doing something wrong, thinking that you are doing right, like that is called rationalization. Okay, for breaking the fraud triangle, in these three elements, that is opportunity, pressure and rationalization, which element can be easily broken? That is opportunity. Because removing opportunity is key to reducing fraud. This is the main thing we have to reduce the fraud. Opportunity is the main thing. So where there is an opportunity, he can able to commit the fraud. So by breaking the fraud triangle, the removing opportunity is key to reducing the fraud. Internal control plays a crucial role. If there is a proper internal control, means the fraudulent activity will be less. Okay, these are all about the fraud triangle. Okay, now we are going to see the red flags. Okay, if there is a fraud, what are all the red flags we will get? See, managers and employees are responsible. Red flag means warning signs, symptoms of fraud. Okay, if we are going to get fever, means we will get some symptoms. If we are going to get cold, means we will get some symptoms. Like that, what are all the symptoms showing there is some fraud is in the fraud is happening? Like that is called red flags. So red flags for fraud, what are all the red flags? The managers and employees are responsible and should be aware of the red flags for fraud. So they should know what are the red flags. Okay, aware of the red flags and responsible. They should be very responsible and aware of the red flags for fraud. There are warning signs. These are all the warning signs that may indicate the fraud risk is higher without evidence that fraud occurring. Here, without evidence, the fraud is occurring. So that will be indicated through warning signs. Okay, accounting irregularities are weak controls. If there is accounting irregularity, there is no proper accounting. So there is a lot of irregularities and weak controls. The control is not proper. It is very weak. Means that we are identifying, means then the internal audit department should be contacted. So we should tell there is some weak controls, there is some accounting irregularities are happening. So please you look after this. So like that we have to inform the internal audit department. Okay, among the red flags, there are two types of red flags. One is employee red flags. How the employee is committing a fraud, or warning signs of an employee committing a fraud, and warning signs of a management itself committing a fraud, organization itself committing a fraud. So we have seen in the previous video now how are the corporate frauds are happening, how the organization itself committing the fraud. So like that, management red flags and employee red flag. Employee means the employee of the company is committing the fraud against the interest of the company. That is employee red flags. Management itself is committing the fraud to show their profit more, like that what we have seen in the previous video. So that is management red flag. The employee, so in that employee lifestyle changes. If suddenly an employee's lifestyle is changing, he is getting so much of jewelries or expensive cars, he is having expensive cars, suddenly he bought expensive cars, he has bought new home, clothes, everything is, his lifestyle is suddenly changed. Okay, so there is some irregularity. Okay, there is something is happening. So suddenly his lifestyle is changing. This is one warning sign. Significant personal debt and credit problems. If there is a person who is having so much of debt and credit problems, definitely he will going to commit the fraud. Okay, because he needs so much of money. And behavioral changes. Some person is having so much of addiction to drugs, alcohol, gambling, means that person is vulnerable, dangerous. Okay, high employee turnover. The employee turnover is high in an organization, means there is something is happening. Refusal to take a vacation or sick leave. If a person is there, he is not ready to take the vacation or sick leave. Okay, why? Because he may think if I am not there means they will definitely identify my fraudulent things. So I should not go for a vacation or sick leave. I should be in the office every time. So we should take a vacation or sick leave. Okay, if they handle the work to some other means that person may identify the fraudulent activity if I am not there in the office. So I should not take vacation or sick leave. So like that he may think, so refusal to take vacation or sick leave. Lack of segregation of duties in vulnerable areas. Okay, in the dangerous area the segregation of duties will not be there. Okay, because somebody will come to know about this. So they don't want to segregate the duties to others. Okay, next one, management red flags. What are all the management red flags? Frequently overrides internal control. If an organization is there, they will override their internal control frequently. Okay, frequently they will change their controls. Management decisions are dominated by an individual or small group. In an organization, a small group is there or an individual is there. He only dominated all the management decisions, means there is something is there. Okay, managers display significant disrespect for the regulatory bodies. Regulatory bodies means the controlling bodies like CB, etc. These for that. Okay, to them the managers of the organization should not give proper respect. Okay, policies and procedures are not documented or enforced. So if they are not giving proper respect means there is something is happening. Okay, policy and procedures are not documented or enforced. There is no proper policy, there is no proper procedures, that things are not properly documented or that are not enforced properly means there is some lot of irregularities is happening. Weak internal control environment, as before I said, in weak internal control environment. Manager and senior level managers has no intention to deceive, but he has done something. Manager and senior manager has no don't have much intention to deceive. Deceive means cheating or fraudulent activity, but he has done something they are doing. Okay, this is also some red flags. Weakness in internal control. Internal control may a lot of weakness. Pressure on employees to commit fraud. Employees, okay, the organization itself giving pressure to the employees to commit fraud, like in Wells Fargo. Okay, Wells Fargo, they put so much of deadlines. Because of that, the employees committed fraud. An excessive number of checking accounts, frequent changes in banking account, checking accounts. So there are a lot of changes, means there is some red flag. It's an red flag. Excessive year-end transaction. Why in the year-end so much of transaction? So they want to tally something, they want to hide something. So an excessive year-end transaction. Unnecessarily convoluted transactions. Convoluted means complex transaction. We cannot able to understand those transactions. These kind of things are present in the financial statement, means there is something is happening in that management. Photocopied or missing documents. Okay, documents should be original. Okay, but they are having only xerox. Where are the original things? If they are asking for any documents, means there is no documents at all. Okay, missing documents means there is some fraudulent activity. Reluctance to provide information. They are not willing to provide information or to engage in frequent disputes with the auditor. If auditor is asking some question, means they will not give proper response. They will commit disputes. So, okay, they will argue with the auditors. This is also a red flag of committing fraud. Okay, next thing we are going to see about the corporate scandals. Okay, in recent times, so much of corporate scandals happen, scams. In that first one is the major first fraud is LIC Mudra scam in 1950s. Okay, second one is Harshad Mehta is a biggest scam. Sahara, Ketan Parekh and Satyam scams. Okay, these frauds were investigated by the law enforcement agency under Indian Penal Code. These frauds were investigated by law enforcement agency under Indian Penal Code. Okay, because of these frauds, some legislative changes happened. What are all the changes? separate definition of fraud under section 447 of Companies Act 2013. This separate definition of fraud is added in the Companies Act. Because of this corporate scandals, they added this section, that is section 447. And also they created Serious Fraud Investigation Office, SFIO, okay, under section 212. Okay, this is all is a creation. These are all the legislative changes made because due to this corporate frauds happened in India. Definition of fraud under, okay, they created the section. Okay, what is that section is telling? What is the definition of fraud under the section 447 of the Act? What is fraud? According to that section, any act, omission or concealment of any factor or abuse of position with intent to deceive, means intent to cheat or to gain an undue advantage. They want to gain some unfair advantages, harming the interest of the company, against the interest of the company, shareholders, creditors of the company or any other person related to them. Okay, this is called fraud according to that section 447 of the Act. Intent to deceive means what? Asset has been judicially examined. The intent to deceive has to judicially examined. That is covered under section 463 of Indian Penal Code. Okay. What are all the punishment because of these sections, under these sections? Okay. First one is for fraud involving amount of 10 lakh. If the fraud is committed for 10 lakh or 1% of their turnover, whichever is lower, means in these two, whichever is lower, 10 lakh or 1% of the turnover. Frauds involving amount of 10 lakh or 1% of the turnover means the imprisonment ranges from 6 months to maximum 10 years. Okay, with fine of 3 times the amount of fraud involved. How much fraud involved? From that, 3 times of the fraud amount, that will be the fine along with this imprisonment. Fraud affecting public interest. The fraud is affecting the public, means public's interest, means 3 years imprisonment. Offences under section 447 is for fraud or no, or cognizable. Cognizable means the police can arrest the person without any permission or warrant of the magistrate or okay. They can immediately arrest a person who has committed the fraud. The police has the power. That is called cognizable, non-bailable. They will get the bail, and non-computable. The factors. What are all the factors court will consider while considering these frauds? Okay, or how they will provide the punishment. On what basis they will provide the punishment? The factors considered by the court. How they will impose the fine, on what basis they will impose the fine. So for that they consider these factors: size of the company, nature of business carried by the company, injury to the public interest, how they affect the public interest, nature of the default, what kind of default, repetition of the default. If the default is repeating again and again, means the punishment will be more. So accordingly the court will consider. Standard of proof. How they consider the standard of the proof? Beyond reasonable doubt. What is reasonable doubt? According to Supreme Court, the reasonable doubt means must be a practical one. It should be practical, not an abstract theoretically hypothesis. It should not be a theoretical hypothesis. It should be practical one. This is called standard of proof. Okay. Reporting duties of auditors. Okay. How the auditors should report this. Okay. The auditor must report any fraud. Okay. Auditors must report any fraud or suspected fraud to the central government. They should inform this fraud. They should report this fraud activities of an organization, or anything happened, they have to inform to the central government. If they fails to inform, can lead to removal. Okay, under section 140 of subsection 5. For reporting, auditors must report. For reporting, the section will be 143 of 12 subsection 12. For if failures happened, means subjected to removal under section 140 under subsection 5. What are the latest developments regarding these frauds and all, regarding this financial forensics and all. Okay, let's see. CB amendments as of October 8, 2020 amended listing obligation and disclosure requirements LOD or regulation to mandate disclosures when a forensic audit is initiated. In an organization, if the forensic audit is initiated, they should disclose as per LOD or regulations. This is the CB amendments. Okay. Why? The disclosure should be how they have to disclose it. The fact of initiation of a forensic audit. What is the fact initiated the forensic audit, including reasons. Okay. On what basis? What is the reason why they initiated the forensic audit? They should disclose. Final audit report after forensic audit. What is the final audit report on receipt along with comments of the management? Along with the management comment, the report audit, the final report audit, okay, final audit report should be disclosed. Okay, this is the disclosure requirement. These 2 points are the disclosure requirements. This is point 1 and this is point 2. Okay, these new requirements creates pressure on audit committees. Okay, these requirements, why? Audit committees and board, because impacting stock prices. If there is a forensic audit is happening in an organization, means why? Due to fraud. In an organization, if fraud is happening or any suspicious action is happening, means the forensic audit will be there. So if they disclose this, means everybody will get to know. So there is something in the organization. So that will potentially impact the stock prices. Though the stock prices it will directly affect the stock prices, and also increasing scrutiny from regulators and media. Media will focus on that. Regulators will investigate on that. So that is the increasing scrutiny. So that's why there is pressure on audit committees and boards. Corporate governance impact. What is the impact on corporate corporate governance due to all forensic audit and all and everything on corporate frauds? Because of that, what are all the things happening in corporate governance, or how they impacting the corporate governance? The reason corporate fraud cases have lead to tighter regulations. Okay, these corporate frauds lead to tighter regulations with independent auditor facing higher scrutiny and responsibility. Because of that, because they are the main directors of corporate governance. So because of these things, the corporate frauds and everything, they are facing higher scrutiny and responsibility. They have to be very responsible to know what is happening in the company. The independent directors are more conscious. They are very conscious. Prefer to undertake. If they are going to undertake a organization, means they are very conscious and to undertake due diligence. They will do a back check, or they will do the background check before accepting board position. So nowadays they are very conscious. So before accepting the board position itself, they will do the background check. After that only they are committing their responsibility to that organization. Okay, these are all about fraud risk management. Now the next topic, the model number 17.3, that is financial forensic and audit techniques. What is financial forensic? Financial forensic is a specialized field that combines accounting expertise with investigative skill to uncover financial crimes and irregularities. It is a specialized field. It is having combination of both accounting expertise and with investigation skill. So the person possessing these two things means they are known as financial forensic analyst. They should have both accounting expertise and investigative skills. Okay. Play crucial role in both. What is their role? They will preventing the financial crimes. Because of them, they are preventing the financial crimes in the future of the organization and assisting in the recovery of lost in the past. What are all the things they lost? In that they will assist to recover. Okay. What is their objective? Main objective of the forensic analyst means discovering criminal activity, investigating finances and preventing financial crime, recovery of funds lost to fraud, and work with the investor to evaluate potential investment opportunity. They will work with the investor to explain and evaluate what are all the investment opportunity in the organization. In that also they will work on it. Okay. What are the common cases in financial forensics? Financial theft. Financial theft means nothing but an employee steals money. Employer or customer. When a customer or an employer or any person related to an organization steals money from an organization means that is financial theft. The financial forensic analyst examine financial records including. So now how they will rectify the case? They will analyze. How they will analyze the case? They will analyze the financial records including receipt, payment history and P&L statements to look for evidence. From that they will collect the evidence. If there is a theft in the financial theft in the organization, by this method, by analyzing these things, they will collect the evidence. Second one is securities fraud. Securities fraud. Security fraud is a type of white collar crime that typically occurs when someone presents false info to an investor. Okay. If stockbroker is there, he is giving wrong information. He is making a person to invest in a particular company. For that he is giving some misstatements and thereby misleading the investor. Okay, that is called security fraud. For example, a stockbroker might give misleading advice to convince a client to invest in a certain company. For that example is Harshad Mehta case. Okay, the shares of the company is purchased. This is also a security fraud. Shares of a company purchased in a bulk. They will purchase the shares of a company in bulk. That leads to price to inflate. Thereby they increase the price of the shares. So artificially they are doing it. Okay, by buying shares in bulk. That is called securities fraud. Money laundering, as we all know, making the illegal money to look legal money. That is called money laundering. They will convert the black money into white, laundering it. So process of making money earned through illegal methods to look legal. How the financial analyst will look into this? Financial analyst will investigate the company documentation, sudden income. If there is a lot of income spikes, the income spikes means there is lot of income. Suddenly they will get so much of income in cash based transactions. Okay, a suspicious transaction, lot of suspicious transaction pattern. So in those things they will identify and investigate it. Through that they will identify the laundering activities, money laundering activities. Next one is corporate valuation disputes. Disputes that arise during the acquisition or merger of business regarding their true value. So whenever there is an amalgamation or merger or anything is happening, like acquisition or merger is happening in a business, there is a valuation. Okay, the business valuation should be there. So what is the true value? Regarding that, there will be disputes. For example, Twitter versus Elon Musk. During buying Twitter, Elon Musk, the disputes happen is an example of corporate valuation disputes. Tax evasion. Everybody knows what is tax evasion. A person avoids to paying their tax. A person or organization avoids to paying their tax. So how they will scrutinize? Analysts scrutinize the tax documents, profit and loss documents, statements, financial transaction to detect signs of tax evasion. Okay, now we are going to see about the forensic audit techniques. Forensic accountants are considered as detectives in economic and business fields because they are detecting, they are investigating to find out the evidence and proof for a financial fraud or financial crime. Okay, so they are called as considered as detective. These people go through every recorded transaction. They will go through every recorded transaction and try to find any fraudulent or illegal activity within the industry. Okay, what are all the qualities of forensic accountant? He should have a logical mind. He should give attention to detail. He give value to moral principles. He should question everything. He should be spontaneous, good, and he should have a good understanding of accounting transaction and its impact. Okay, should have a good understanding of accounting transaction and what is its impact. Okay. Investigation techniques for forensic accounting. What are all the investigation techniques involving the forensic auditing or accounting? See, what are all the things they will do? Reviewing the public documents and conducting background check. They will review. Public documents means nothing but if an organization is there, through their website, what are all the documents they can able to get. From that documents, they can able to find out. Okay, they can analyze, they can investigate. So that is called reviewing. They will review the public documents and conducting background check. Scrutinizing publicly available documents like corporate records, public databases to gather relevant info about the business and its dealings. Conducting detailed interviewing individuals to gather valuable insights. They will interview some persons relating to that organization. Okay, from that they will collect the information and get the information about the situation. The process involves careful preparation. They will carefully prepare it and understanding of the broader context. Through that they will understand what kind of things are happening in a broader way. So interview help them to understand in broader way. Gathering information from trustworthy source. They should gather information through only trustworthy source. They cannot gather through all the persons. Okay, so that should be trustworthy. Collecting from reliable and confidential sources, ensuring their identity is protected properly. It is protected or not. For that they have to ensure it, which can lead to accurate findings. Then only they can find it accurately. Next one is analyzing evidence gathered. After gathering and all, they have to analyze the evidence. So performing a detailed analysis of the collected evidence to identify the perpetrators, means the persons who are connecting the fraudulent activities, and understand the extent of fraud. From that they will understand the extent of fraud and helping to implement preventive measures. Accordingly they will implement the preventive measures. Conducting surveillances. Okay, employing physical or electrical surveillance to monitor the activities or gather evidence related to fraudulent behavior. They will gather the evidence related to fraudulent behavior through monitoring the activities of the organization. Going undercover. What is meant by going undercover? An extreme measure used only when necessary. They have to go extreme only when necessary. Otherwise they should not go into the extreme level. Okay, it requires expertise to minimize risk and ensure safety. During investigation they will have some lot of risk, so they require expertise. For that they need experts to minimize the risk and ensure safety during their investigation. That is called going undercover. Analyzing financial statement. The final thing of the forensic accounting technique is analyzing financial statement. Through conducting an in-depth analysis of financial statement to detect and identify potential fraud indicators, they can able to detect the anonymous or identify the potential fraud indicators through what? In-depth analysis of financial statement. If they analyze the financial statement deeply, means they can get a fraud indicators. Deep analysis of this statement and help a forensic accountant to figure out the scam. Deep analysis also helps them to analyze the or figure out the scam. They can identify the scam. Okay. Till now we completed this financial forensic and forensic audit techniques and fraud risk management. These two topics we covered. So rest I will cover in the upcoming videos. So please subscribe. Thanks for watching. Thank you.